Looking at GBP USD, that is a pound dollar. So looking at pound dollar, today we have a very important fundamental data print. To have the Bank of England monetary policy report, which gives you an overall outlook into state of British economy. And we have a monetary policy summary, which is a cumulative and a total insight, a forensic audit, a forensic observation of the state of the UK, entire British economy, to look at what's going on. And we look at official bank rate votes. Official bank rate votes are normally done by heads of monetary policy teams. They come together, they decide what should be the next monetary policy outlook for forward guidance. And we'll have official bank rates. It's intended that the Bank of England, under its monetary policy committee, are expected to drop rate from 4.25 to 4.0. That's a forecast. So it will depend, and is a function, it's subject to the voting. If they vote to keep rate the same, or I mean, there is nothing you can do. Last time, the Reserve Bank of Australia did such to us. We were expecting the Reserve Bank of Australia to cut rate, and they kept rate the same. So it's also possible, after the voting by Monetary Policy Committee, that the MPC might keep rate the same. If they keep rate the same, that could technically be 4.25 overnight lending for banks in Britain. So we'll be looking at that, and shortly after that, the head of Bank of England, Sir Belly, will speak. And we all know his words carry weight. London Stock Exchange is not a small market in the world of forex. London market and New York market are the two biggest markets that are volatile, and they come together to trade to bring the highest volatility and the volume of trade in the market. So all eyes will be on Sir Governor Speaks. I'll be watching his rhetorics. I will watch his body language, how hawkish or dovish he is. If he sounds hawkish and we see that rate remains the same, then the monthly strategy for GBP dollar will continue to hold. So let's dive back and see the structure on a monthly time frame. On a monthly time frame, going back into 1981, over 45 years ago, we have seen the British pounds holding strongly against the United States dollar, exchanging at 4.45, and we have seen that drop from 1980 to 1985. The British pounds have lost significant value to United States dollar. And we have seen a couple of consolidation after we have a break of structure over here. You will see RS level here. You will see a support structure here, breakout structure. Now return price to RT RS1, RT RS2 in to 1990, RT RS in 1992, and we have had another one in 2007. And that puts here on a potential supply roof on this ascending trend line, which I will call ATL. So we must keep this in mind, as the market is very objective. And I will always tell you something, that the pound, the pound dollar, that never makes mistake. The structure is very accurate in every way you want to see it. And when we came down here, we made this very strong mark on the demand structure, and you have seen price return here in 2022 to respect it, and we have seen them, the pound dollar, have kept buying on that fundamental proof that we had in 1985, after price showed a significant drop and the plummeting of the British British pounds against the United States dollar. And we have seen a significant move in price, and market has created an elevated ascending trend line again, which is worthy of note. And when you look here, we return here as a supply rule, giving us an ascending trend line. So we have two structure. This is our demand floor, and this is our supply roof. So I'm also going to put this up. I'm going to put it up. So this is our new demand floor. So on this new demand floor monthly time frame, if you look critically, you will see that price is yet to return into the structure. So if we return here, like you see, but before we do that, market has to clear this floor. We have here a demand floor, SR1, SR2, SR3, break of SR level, RS1, RS2. We are expecting a push into here to serve as a supply roof. Yes. So I'm expecting it. So let's watch and see what will be the outcome of today monetary policy committee, and what the head of the British bank would say, let's watch his rhetorics to see if he sounds hawkish. If he sounds hawkish, we could see that the British pounds will keep gaining. But if he decides to turn to the side of the dovish and we see rate cut, most likely that carry traders and we will see that UK 10-year bond yield is going to feel the impact. And the moment we begin to see UK 10-year treasury bond, you begin to take a reverse as a result of change in monetary policy. The United States dollar have no other option than to sink the price. But at the moment, I think I don't want to say what they will do, but let's wait and see what will be the outcome of MPC. So whatever they decide, if they decide to keep rate the same 4.25, that will be a good opportunity. And if we continue to have a strong hawkish tone coming on from the Bank of England, the head Sir Belly, then we could see the British pounds, playing smart against the United States dollar. So that's what we see at the moment. So let's keep tuning and see what market does. This is London market reporting, and we're about to move into New York session. So remember that every key level in trading can fail. Treat trading as probability. Wish you good luck as you start the day. Start strong. See you at the top. Bye bye.